Hi there. We're here with our lending partner, Ephraim Schwartz with Odette Mortgage Group to do just a quick powwow about where we are in the lending world. My goal is to keep you updated on all things real estate related, and lending is a big portion of that. We were just talking, the last time we did this was February, so we're a little overdue for an update. Ephraim, thank you and welcome. Maybe you can tell everyone and me what's changed between now and February, kind of where we are with rates and kind of what you're seeing.
Yeah, good question. Thanks for having me. So for the better part of the last year and a half or so, we've been really watching inflation come down. It made a lot of progress, came from like 9% to 3%, but then as expected, getting from 3 to 2 is just a really slow slog. And we're seeing things improve by like maybe 0.1% a month. So what we've seen is rates kind of not really respond yet. We know that the Fed has not cut rates. We're seeing buyers come back to the market a bit. We've certainly picked up, and a lot of folks thinking, that now's a good time to get in, and they will likely refinance when rates do eventually drop in the next few years.
Let's talk a little bit more about that because a lot of my buyers are paying cash and they are coming back to the market. Summer's about to kick off. We got 4th of July a couple weeks away, and then it's game on. But there are a lot of people that are sitting out there wondering and waiting, and it's related to the interest rates. Talk to us about what the benefits are of financing now versus waiting, and then what the impacts might be when you refinance, what that math kind of looks like.
Yeah, good question. So when you look at total cost of ownership, both in terms of monthly payment and cost of ownership over the life of purchase, a 1% fluctuation in the interest rate is very close to the equivalent of a 10% fluctuation in the purchase price. And that is on a 30-year fixed, assuming 20% down. And so if prices move up 10% and rates come down 1%, it's a wash. So the question that everybody should be asking themselves is, based on the supply and demand, what are we more likely to see happen first? Rates come down significantly or prices begin to move back up? And what we're seeing is that buyers are coming back to market faster than rates are moving down.
Same thing. Yeah, absolutely. Well, those are some key takeaways, that 10%, 1% equation. What other advice, if any, you got for buyers that are kind of hanging out there thinking about financing? What are the big tips, takeaways?
Yeah, one thing that you just mentioned is folks paying cash. Reminder that if you pay cash for a property, you have to record a lien against the title within 90 days, or the IRS will not consider that acquisition indebtedness and therefore lose tax deductibility benefits for the life of the ownership of the property. So folks paying cash, just be aware of that. Other tips are just really look at the financing right now in the context of the likelihood that rates are going to come down in the next 2 to 3 years, which all the data, when we look at inflation, the Fed and the amount of bonds that they're buying and now selling, and they're going to taper that off, all the data suggests rates will come down, but it's not going to happen. But we're going to have to be patient. And so I would say now's a good time to be still somewhat contrarian and opportunistic and get in before too many buyers come back to market. You hold that loan for a couple of years and you refinance when rates drop.
Brilliant. That's what I've been telling them. So thank you for echoing my suggestions. We just scratched the surface here today, but hopefully give you a quick update. If you want more information, obviously contact me. I'll provide Ephraim's contact information as well, and appreciate your time. Thanks, Ephraim.
Thanks, Brett.